Did you know that the stock market actually hit an all-time high just days after Donald Trump was elected in 2016? It skyrocketed by over 2,000 points in the following months. The world was in shock when Donald Trump won the presidential election in 2016. Many people, including investors, were unsure of what to expect from his presidency. Would his policies and statements send the stock market soaring or plummeting? In this video, we're going to dive into what happened to the stock market when Donald Trump got elected. The uncertainty surrounding Trump's election was palpable, and investors were on edge. Many had predicted a market crash if Trump won. But as the election results rolled in, something unexpected happened. The stock market began to rise, and it rose fast. The Dow Jones Industrial Average surged over 250 points on election night, and the S&P 500 index gained nearly 1% in the following 2 days. But why did the market react this way? Many investors were caught off guard, and some were even bewildered by the sudden surge in stock prices. After all, Trump's campaign had been marked by controversial statements and unorthodox policy proposals, which had many pundits predicting a market downturn. So, what changed? As the dust settled, investors began to focus on Trump's pro-business rhetoric and his promises to boost economic growth through tax cuts and deregulation. This renewed optimism about the economy's potential sparked a wave of buying activity, driving stock prices higher. With Trump's victory, investors were faced with a new reality, a reality where the rules of the game had changed. The old certainties were gone, and a new era of uncertainty had begun. In this environment, investors had to adapt quickly to stay ahead of the curve. In the days and weeks that followed, the stock market continued to rally, with the Dow Jones Industrial Average breaking through the 19,000-point barrier for the first time in history. It was a remarkable turnaround, and one that left many investors scratching their heads. But as the Trump presidency unfolded, investors were faced with a new set of challenges. The president's unpredictable tweets, controversial policy announcements, and shifting stance on key issues kept the markets on edge. It was a roller coaster ride, with stock prices fluctuating wildly in response to each new development. As Trump's policies took shape, investors began to focus on the specifics, the proposed tax reforms, the rollback of Obama-era regulations, and the escalating trade tensions with China. Each new announcement sparked a fresh wave of market volatility, as investors struggled to make sense of the rapidly changing landscape. The Tax Cuts and Jobs Act, signed into law in December 2017, was a major milestone for Trump's presidency and for the stock market. The sweeping tax overhaul promised to slash corporate tax rates and stimulate economic growth. Investors were optimistic, and the market responded accordingly. But Trump's trade policies were a different story altogether. The escalating trade tensions with China, coupled with the president's aggressive rhetoric, sent shockwaves through the markets. The trade war sparked a series of tariffs, counter-tariffs, and retaliatory measures, which threatened to derail the global economy. Despite the volatility, the stock market continued to defy expectations, with the S&P 500 index surging to new highs in 2019. It was a remarkable rally, driven in part by the Federal Reserve's dovish monetary policy and the synchronized global economic growth. However, the trade tensions were far from over, and the markets remained on edge. The impeachment saga, which began in 2019 and ended with Trump's acquittal in 2020, added another layer of uncertainty to the mix. It was a time of great turmoil, and investors were forced to navigate the treacherous waters with caution. As Trump's presidency entered its final stretch, the stock market was still reeling from the aftershocks of the pandemic. The global economy was in a state of lockdown, and the markets were in free fall. It was a desperate time, and investors were left wondering if the worst was yet to come. But even in the darkest of times, there were glimmers of hope. The Federal Reserve's emergency measures, combined with Trump's belated response to the pandemic, helped stabilize the markets. It was a fragile recovery, but a recovery nonetheless. The stock market's performance during Trump's presidency was marked by periods of extreme volatility, punctuated by flashes of brilliance and moments of sheer terror. It was a wild ride, and one that left many investors breathless. As we look back on Trump's presidency, it's clear that the stock market was heavily influenced by his policies and statements. The uncertainty and volatility that characterized his term in office will be remembered for years to come. In the end, the stock market emerged from the Trump presidency with a great deal of knowledge and a few fresh scars. It was a period of rapid growth, punctuated by moments of great uncertainty. So, what did we learn from this experience? The stock market is resilient, adaptable, and surprisingly forgiving. It can survive even the most turbulent of times and come out stronger on the other side. Thanks for watching. If you have any thoughts on the stock market's performance during Trump's presidency, please share them in the comments below. And if you want to explore how the stock market performed under other administrations, be sure to check out our other video on the topic.